They all earned money, but not all of it looked like income. Cash tips, barter, side gigs, family payments. So here's the real question. What actually counts as self-employed income?
Every night she counts the cash tips into a jar. Nobody ever told her which dollars the government actually expects to see. A carpenter fixes a neighbor's fence. In return, he gets a used truck engine. No cash changed hands. So is it even income? She checks 3 gig apps for tax guidance. Each one gives a different threshold, a different form, a different answer. A shoebox of receipts, cash jobs, digital payments, a handwritten IOU. None of them look the same, but do they all count? Somewhere between a tip jar and a bartered engine sits a form most people have never actually read. The line is thinner than it looks. She sells hand-painted mugs online, calls it a hobby, and never mentions the $4,000 it made her last year. A rideshare driver gets a notification, "Your annual earnings summary is ready." He swipes it away and keeps driving. He rents his spare room short-term through an app. It feels like splitting costs with a friend. Legally, it's something else entirely. She helps her uncle's landscaping business every weekend. He pays her in cash and calls it family helping family, not payroll. Tips, barter, hobbies, rent, family cash. Different situations, one shared question. When does any of it legally become income? When she totals her side income for the year, she rounds down without noticing. A little less on paper always feels safer. In a group chat of freelancers, someone insists cash under $600 is invisible to the IRS. Everyone believes it instantly. In February, a tax form arrives from a platform he forgot he'd used. Suddenly, last year's small side thing has an official number attached. Her spreadsheet says one number. Her bank statement says another. The gap between them keeps growing every time she checks. Her partner asks a simple question. "Did you report the tutoring money?" She realizes she genuinely doesn't know the right answer. He checks the mailbox twice in one afternoon, though nothing new has arrived. The waiting has become its own kind of stress. She laces up her running shoes, then sits back down to search "Do I owe taxes on bartered work" for the 3rd time this week. In the break room, a coworker jokes about not reporting freelance design work. She laughs along, but the joke doesn't feel funny anymore. 2 neighbors trade babysitting hours instead of paying each other. No money moves, but hours worked can still carry a value. She used to track every sale. Now she avoids opening the dashboard altogether, telling herself she'll deal with the total later. At midnight, he adds up tips, bartered labor, and hobby sales on a phone calculator. Each new total feels heavier than the last. Somewhere between the jars, the spreadsheets, and the late-night math, one thought becomes clear: there has to be an actual rule. The IRS defines income broadly: money, property, and services received in exchange for work. Almost nothing is automatically exempt. Cash tips don't disappear from the tax system just because no receipt exists. The obligation to report them starts the moment they're received. Bartered goods and services are valued at fair market price. The carpenter's fence and the engine he received are both taxable exchanges. Consistent effort, repeat customers, an intent to profit push a hobby into business territory, and business income must be reported. Gig platforms report earnings directly to the IRS once totals cross a threshold. Ignoring the notification doesn't make the number disappear. Rent a room more than 14 days a year and the income becomes reportable. a specific, concrete line most hosts never learn. Regular, ongoing paid work, even for family, can cross into reportable income once it looks less like a favor and more like a job. Different platforms and payment types trigger reporting forms at different thresholds, and the number is often lower than most people assume. That $600 number only affects when a form gets issued. The actual duty to report income exists no matter how small the amount. The tax code treats a paid invoice and a traded favor the same way, as long as real value changed hands between two people. Self-employed earners pay both halves of Social Security and Medicare tax themselves, a detail most side hustlers never see coming. Freelance income isn't taxed automatically like a paycheck. It often requires estimated payments sent in 4 times a year. Reporting income isn't the whole story. Legitimate expenses, tools, mileage, supplies can reduce what's actually owed. The rules aren't secret, but they're scattered, spread across forms, platforms, and thresholds that were never designed with one person in mind. Tips, barter, hobby sales, rent, and family cash all reduced to one simple test. Did real value change hands for work performed? Understanding the rule is one thing. Most people who get this wrong aren't ignorant. They're relying on fixes that quietly don't work. He turns down extra tutoring hours to stay under the radar. The strategy caps his income without actually solving the reporting question. Some workers insist on cash only, assuming it stays invisible. But cash income carries the exact same legal obligation as anything else. Waiting until tax season to sort everything out doesn't reduce the obligation. It just compresses a year of decisions into one stressful week. He trusts a friend's confident tax advice over reading the actual rule. Confidence isn't the same thing as being correct. She opens a separate account for side income, feeling organized. But a tidy account doesn't equal a filed, accurate tax return. Terrified of underreporting, he logs his birthday cash gifts as business income too. Overcorrecting creates a different, equally confusing problem. Tax software asks a question he doesn't understand, so he guesses. The program accepts the answer without ever flagging the mistake. She notices a neighbor clearly not reporting similar income and feels reassured. Someone else's risk was never actually her answer. Overwhelmed, he deletes old payment records instead of understanding them, mistaking erasure for resolution, a decision he'll likely regret. She bookmarks an official tax guide, feeling proactive. The bookmark stays unopened for months, doing nothing but easing guilt temporarily. Different people, different workarounds. The same result. None of these fixes actually answer the question everyone's been avoiding. None of the workarounds solved anything. The real fix was never about avoiding the question. It was about finally answering it clearly. One test replaces every confusing scenario. Did you receive value for work, service, or property? If yes, it likely counts as income. She now logs every cash tip the same night she earns it in a simple notebook. The habit takes 90 seconds and ends the guessing. The carpenter now writes down the fair market value of every trade the same day it happens, treating barter exactly like a paid invoice. She now separates hobby joy from business tracking, logging every sale the moment it ships. The clarity took away the fear, not the fun. He now reviews his weekly earnings summary every Sunday instead of avoiding it, turning a source of dread into a 5-minute routine. He now tracks rental days on the same calendar where he once just circled dates in confusion, adding income totals directly beside them. She and her uncle now agree on a simple written log for hours worked and cash paid, keeping the family relationship and the paperwork separate. Across every scenario, one habit repeats: Write it down the same day it happens. Same-day logging turns confusion into a simple record. A separate account still helps, but only when it's paired with actual record keeping. The account organizes money, not obligations. Legitimate expenses reduce taxable income, but only with proof. A simple folder of dated receipts turns deductions from guesswork into evidence. Setting aside a fixed percentage from each payment as it arrives makes quarterly taxes predictable instead of a sudden, dreaded expense. Complex situations, multiple income types, rentals, family arrangements, often deserve a professional's eye, not another guess. There's no official amount too small to count. The threshold only affects paperwork, not the underlying legal duty to report it. 10 minutes every Sunday, logging income, filing receipts, checking totals, replaces an entire year of anxious guessing. The confusion was never about the money. It was about not knowing the rule, knowing it changes everything that follows. Every confusing scenario in this story leads back to the same simple truth, one worth carrying into whatever side income comes next. A bartender, a carpenter, a craft seller, a driver, a host, and a niece. 6 different situations, one shared understanding. Nothing about their income changed. What changed was the moment they stopped guessing and started simply writing it down. Confusion made every small decision feel risky. Clarity made those same decisions feel almost effortless. If real value changed hands for work, it likely counts as income, whether it arrives as cash, a favor, or something in between. Tomorrow looks almost exactly the same. Another shift, another trade, another sale. Only the understanding underneath it has changed. Every confusing dollar in this story eventually became a clear one. The same clarity is available to anyone willing to write it down. If this cleared something up, the next step is simple. Like this video, share it with someone who freelances, and subscribe for more of these breakdowns.